Hello traders, Gary Wagner here. It is just before 10:30 in Honolulu, 4:30 in New York. Equities markets have closed Tuesday, May 31st, 2016, and after trading to a substantial high, meaning about up 100 points on the day, Dow Jones Industrial Average is closing off by about 80 points to close at 17,787. Standard & Poor's also closing lower on the day, but only off fractionally, 0.1% approximately at 2095. Now, the high was 2103.75, and that's what's really important, is that we hit that high but bounce back off of that low today, 2086. So if we have seen the equities markets on a virtual roller coaster ride today. Traders, we're looking at a daily chart, standard candlestick format. This chart, of course, is of the Dow Jones Industrial Average. You can see today's trading activity, a relatively large candle, about mid-size when we look at the extreme ranges that are possible, and consolidating candles, of course, that contain an extremely small range on the day. Now, the interesting thing is this particular high that we achieved. The market traded to an intraday high of about 17,899. So call it 17,900. And as I looked back historically to see what price points we could actually see the market at that particular area, there was really only one price point, and that is these series of highs right here and right here. They, of course, occurred in November to December of last year, and they occurred just before the market really fell out of bed and really squashed any kind of a Christmas rally, so to speak, as we witnessed the Dow Jones Industrial Average at the end of last year trading from that high of about just shy of 18,000, I should say, all the way down to 15,400. As we have just seen, Dow Jones Industrial Average closed off about 0.5% on the day after trading substantially higher. Not so much with the Standard & Poor's 500 closing off about 2.25 points off 0.11%, about 0.1% lower at 2095. Nonetheless, the market has, at least for the short term, run into a little bit of resistance right at about 2100, because traders, the intraday high today was 2103. Now, I am still firmly under the belief that we will go and flirt with these record tops above 2100 here and possibly trade to a new record high. Now, that's all in light of the fact that we will probably, or most likely, I should say, see some sort of an interest rate hike. At least that's what Yellen alluded to on last week's activity. And so we are seeing the market have a delayed effect to that, but I believe that we have a real opportunity to buy the dip. So what we want to do is, I am still bullish on this market. I'm still looking for a place to position ourselves in. But now that we have seen a little bit of resistance come into the market right at around 2100, we know that it must remain above this 50-day moving average. That, of course, is what is critical. But if we have the market even trade to about 2080, because that's a very, very strong supportive point, I think we've got a pretty good buy opportunity. Now, intraday, the market traded to 86. You can see that low right in here. But I think that we might have an opportunity to see the market trade as low as 2080, and that might be our signal to enter the market from the long side, because I do believe, as I said, we are probably going to witness equities take out this most recent high that occurred, of course, in April of this year. And then we have another high that comes in right at that area, just a little bit above. And that occurred, of course, in October, November of last year. And then in December of last year, as we just talked about on the Dow Jones Industrial chart. And that was just prior to this dramatic sell-off in U.S. equities markets that really culminated about mid-February. We're looking at the U.S. dollar. U.S. dollar up about 0.33% on the day, 30 points higher to close at 95.82. When we take a look at this weekly chart, of course, it's only Tuesday. Markets were closed yesterday, so this weekly candle is only showing us today's activity. But as you can see, we have effectively barreled and closed above that 23% resistance area that occurred at around 95.34. That being said, we do have a small moving average. This is not one that I hold a lot of credence to, but it's currently where we have pegged our close as well as our high. I believe that we could, in fact, see the dollar hold steady to move higher. And that, of course, is based upon the assumption that we will see some sort of an interest rate hike next month, starting tomorrow, of course. Month begins tomorrow, but next month. And that would be extremely supportive of the U.S. dollar. We witnessed oil under some pressure today, closing off almost a full percentage, 0.87%, down 43 cents per barrel. More importantly, below $50 per barrel to close at $48.90. Now, my sense is that we can absolutely identify a series of tops in the market. We have one right in here. We can consolidate the chart a little bit so you'll see another one. And that is kind of lining up to our current price, which seems as though we have got a little bit of top-heavy action in crude oil at about 50. Now, we also saw that at 48. Right in this area here. We also saw it at 46, this area here. So I'm going to need a little bit more data before I can say that on a technical basis we have absolutely found some resistance in the market. But as I said, once we compress the chart itself, you'll see that this particular price point, again, right around $50 per barrel, was absolutely a top in the market. It came in, of course, in September of 2015, and from there the market hit about 50, and that was the beginning of the end, so to speak, till reaching this double bottom at about $26 per barrel. I would look for oil prices to remain steady to under pressure and lower over this next week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.